Hi, everyone. Today, let's talk about the Fed meeting and Jerome Powell's comments. And then we'll talk about what looks like the next victim here in the regional banking sector. Then we'll go over the economic data and the earnings calendar. Then we'll get into the charts. And then we'll finish up with my results for the day and my thoughts going into tomorrow's session. Don't forget to check out the Patreon and the Twitter. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Jerome Powell raised interest rates once again, 25 basis points, as expected. So let's take a look at some of the changes, highlighting the fact that they dropped the sentence saying we might need additional rate hikes. Word for word, it said additional policy firming. They took that out, potentially signaling that we're looking at a pause at the next meeting. Of course, the statement did mention that the U.S. banking system is sound and resilient. They continue to say this despite more banks starting to look like they're going to fail. And then they continue to reiterate the fact that they will be data dependent. They are at the terminal rate that they mentioned in March, but it certainly seems likely that if inflation were to take a pretty strong uptick, that we could see rate hikes resume in the future. And then later in his briefing, he did mention that the Fed is prepared to do more if warranted, signaling that if inflation goes higher, then obviously rates will go higher also. Later, he mentioned that the labor market is cooling and that he still sees the possibility of avoiding a recession despite the Fed minutes that came out for March, signaling a potential shallow recession. But Jerome Powell personally doesn't necessarily agree with that prediction. And lastly, and most importantly here, referencing cuts, he said, if the Fed members are correct, it may take some time for rate cuts to come in, and this is the discrepancy that we've been talking about between the markets and the Fed. The Fed continues to say higher for longer and that no cuts are coming this year, but Fed futures continue to think that some cuts are going to come because of the turmoil in the banking sector. Moving over to the Fed futures just for a moment, you can see that percentage went up quite a bit here for the pause. Last week's probability was 63.8%. Previous day's percentage was actually a little bit higher at 86.2%. And now we actually have a higher probability for another hike in June, which is interesting. This was previously 0%. Now it's at 22.7%. Again, that's in line with data-driven probabilities. Certainly possible, but not what we're expecting right now. And looking at September here, you can see most likely case is still a cut in September, despite the Fed comments in terms of probabilities. People still think a cut is coming in September. Moving over to PacSun, falling 50%. It does seem like this is a bit of a trend now. We can say there was a few isolated cases, but now First Republic has been sold, and PacWest is weighing a sale, and it's down 50% after hours. Definitely not what you want to see, which is definitely concerning. They said that their deposits declined $5 billion in first quarter as of March 31st, but they did mention that they saw a net gain of $1.1 billion from March 20th to the end of the quarter, meaning that potentially there was a little bit of reassurance in the markets, and that they also increased $700 million from March 31st to April 24th. So additional inflows propping up their liquidity at least a little bit. And then referencing the regional bank ETF down 4.4%. Western Alliance down 29%. Looks like they would be the next victim if this domino continues. And then Comerica down 11%, and then KeyCorp 6%. So it does seem like this regional banking issue is not complete, and that the additional rate hike from today is going to make that issue a little bit worse in my opinion. Moving over to the economic calendar here, you can see ADP non-farms came back at about double expectations, so doing very well. All of the PMIs were better than 50%, so there is some growth still, especially in the service sector, but most of them were worse than expectations. The most important one here, ISM non-manufacturing PMI, better than expectations, better than 50%, indicating some economic strength. And then moving over to Thursday here, we have initial jobless claims. This continues to be quite interesting, and that's the most important thing here for Thursday. Moving over to earnings, Qualcomm met expectations on earnings, beat on revenue, but they put out pretty bad guidance and they're down about 3% after hours. CVS met expectations. Generally, there's just a little bit more red on the board, which is interesting. Estee Lauder missing on earnings. MetLife missed on both top and bottom line. Kraft Heinz, those consumer staples continue to do well, beating on the top and bottom lines. And then tomorrow, don't forget, we got the heavy hitter, Apple, after hours tomorrow, Shell Corp, interesting, Budweiser, again, they've been in the news, kind of fun to watch, Booking.com, Shopify, Monster Beverage, still crazy to me how big that company is, and then Ferrari, Moderna, a couple of smaller companies here that are interesting. But remember, Apple, after hours, definitely going to have a big impact in the market. And I've seen some articles here recently saying that there's definitely some concerns about Apple's earnings and their forward guidance. All that being said, let's get into the charts here today. So 1 hour and the 12 hour on the SPY, you can see we wicked the highs and then sold off. I kind of thought going into the week that we would wick the higher highs and then break down. We ended up getting a wick, but it was much lower, and then we broke down significantly. Once we got below that 410.54 level, it makes sense that we would come down to this 105.29 level. This definitely looks weak now, so we have a high, lower high set up, and we also have a low, lower low setting up. Big momentum on the down move, big volume as well. You would expect this to have follow through here. You can also see divergence on the MACD on the 12 hour, making lower lows despite higher prices on this move higher. So definitely breaking down here. Looking at levels, I already mentioned 405.29. That's my next level. If that level breaks, we have the 144 EMA here at 404.14. If that breaks, then I'm looking at the 200 SMA sitting at 399.75, and then 399.25 is my next level right here at this zone. And then momentum and RSI definitely bearish, crossing below the 50 line, breaking down on big volume, definitely looks weak going into tomorrow's session. Moving over to the NASDAQ, similar thesis. We now have a high, lower high setup. Now we're looking for that lower low setup. We're pretty much at my level here, 315.98 after hours, watching for that level to break tomorrow. Might get a bounce, might get a little bit of a rally into the early session, but I definitely don't suspect that this is going to break higher or anything. Any rallies I expect to be met with sellers, come down here and then start to break down again. We have the trend line sitting down around 1387, which is right in line with my horizontal support. Wouldn't surprise me if we got a test off of that level tomorrow. And then looking at the 4-hour chart, you can see the 144 EMA sitting down here at 313.71, not far below that next lower support. Moving over to the Russell and the Dow, similar thesis, high, lower high setup, everything is moving lower. We broke that 170.35 level here after hours, down 1.5%. Looking at 167.50 here on the Russell. I expect lots of weakness in the Russell based on those regional banks. They're definitely more affected by those regional banks. And we've seen that over time as those banks continue to struggle. This ETF continues to struggle. Looking at the Dow, similar thesis, going lower here, retesting my 332.44 level. Hit that, starting to bounce. You can see that low that it marked here on 26 April before we had that pretty substantial move. And now we're seeing the reverse of that with the high, lower high, breakdown, testing this level. Again, this certainly could hold. We see a little bit of a bounce, and then I would expect that to fail and move down to 329.40 or so. Moving over to Apple and Tesla, you can see Apple breaking down here, hit that next level, 170.90, just barely wicked it, and we're breaking down, broke that 167 level, and now we're looking down at this next trend line, wicked that level. We'll see if that breaks down tomorrow. You also have the 144 EMA at 162.32, certainly a possible area of support. If that breaks, then 159.35 is my next lower level. Again, we have Apple earnings tomorrow. We'll see how that plays out. I could certainly see this holding up in tomorrow's mid-session until we get the earnings. But overall, down here on Apple, definitely not good. Moving over to Tesla, holding up surprisingly well, wicking that area of highest volume at 164.24, and then breaking down from that level, still consolidating in this zone. I'm still bearish here, but it is holding up surprisingly well. Moving over to Amazon and Etsy here, you can see Amazon showing some weakness. This looks like a retest of this trend line now and looks like we're breaking down lower. If we get below 102.50, then I'm looking for $99. You also have the 144 EMA here at 99.58, but I would expect that this is going to go lower here and retest the 200 sitting at 96.50. Etsy, on the other hand, they announced their earnings today. You can see that volatility on that chart, but we're back above $100.50. We're up at 101.40, and it does kind of look like we're breaking out of this downward wedge now. And this might be one to watch, giving you some bullish opportunity in a market that looks like it's going lower. Moving over to AMD, you can see this continues to waterfall. We talked about their earnings yesterday. It was not good. Their forecast was not good either. Looking at this next trend support down at 78.67. If that breaks, then $74 would be my next level. But this looks super bearish now. We're below all the EMAs and SMAs. And this looks like it's going to have some more movement to the downside, in my opinion. Looking at NVDA, it did move lower today, but it's still holding up surprisingly well. It's above the 55 EMA here at 274. If that level holds, then maybe we see a little bit of sideways price action or even some rallies. Really, it has not generated any lower lows quite yet. This previous low is down here at 262.12. It was chopping in this zone for a while. And until we get below that low, we're still kind of moving higher, but mostly sideways. Moving over to staples and discretionary, we talked about staples kind of being done here at 77.50, and that appears to be the case here. We're going lower again, down to 76.50, very close to testing the 55 EMA. That breaks, looking back down to 75.40. This might consolidate here for a while, allow the EMAs to consolidate and move higher, and then we'll see a bigger sell-off, but it is moving lower right now, and it does have some momentum. Moving to discretionary, it looks very weak. We're below all the EMAs and SMAs here on the 4-hour chart. Looking at 143.04 for my next lower level, and then 141.03 as the next level below that. This definitely looks weak and will most likely go lower tomorrow. Moving over to transports here on the 12-hour and the daily, you can see we wicked that next trend resistance. Both of them here on the daily chart. We're up above them quite well after hours at 230, and it looks like we're going higher at this point, and it almost looks like a breakout, especially with the move after hours. We'll see how this all plays out, but transport's going higher and everything else going lower does seem a little bit strange, so this is one to keep an eye on. Definitely looks bullish going into tomorrow's session. Moving over to breadth on the 50 and 200-day averages. Not much to say here. We talked about this going lower yesterday, and it ended up closing lower again here today. And I would expect this to have more follow-through on this down move than the previous down move that we saw. Overall, bearish going into tomorrow's session. Moving over to the dollar here on the hour and the 12-hour, what a move here. So selling off super aggressively all the way down to that 101.25 level. Definitely not what I expected. I thought we would see this start to break out a little bit, but we wicked this resistance and then sold off, broke this trend and then sold off. Continuing lower, we're now below this horizontal support line. Momentum super bearish on both charts. And even on the hourly chart here, you can see super oversold and that this might be going lower in tomorrow's session. Moving over to junk and TLT, you can see junk through a wick to the upside, hit those levels that we talked about, breaking down here again, looking back down to this 91.28 level. If that breaks, we have $91, and if that breaks, then there's a lot of downside to $89, which I would expect all of that to happen as long as the markets continue lower as well. If they're moving in the same direction, I do expect more follow through. Looking at TLT, got a little bit of a boost based on the rate hike. That makes sense, especially with the comments of a potential pause coming and being data driven. Moving over to the VIX here, you can see we set up a higher low and we're starting to rally again. We got above 1850 for a bit, and I would expect this to go higher. Looking at 20 on the VIX, daily chart going higher, momentum building. We're across the 50 line on daily RSI. This looks like we're going higher on the VIX, which means lower on equities. Moving over to my accounts, you can see I made a few bucks, not a lot. I took some pretty small positions here at the end of the session. It did look like we were moving lower, but I did sell a call and a put on my individual account. 321 call for 47 cents, 313 put for 36 cents. So not assuming a ton of risk here. I'll start to scale back into my normal size on positions tomorrow, depending on the price action that I see. And then looking at my IRA, you can see I put a 312 put back on. Again, that's just about the maximum that I can afford in this account, but it also gives me lots of protection from current prices. We were at 317.29 at the close, and we're down about 75 cents after hours. And I'm really not in any trouble for another $4 or so to the downside, which absolutely could happen. Definitely looked like we were going lower, and we are going lower after hours. And if it starts to look bad early in tomorrow's session, maybe I'll take this off and then look to put on a lower position. And like I said on the NASDAQ chart, I'm really watching that 315.98 level. Overall, neutral to bearish, mostly bearish. Let me know down in the comment section what you thought of Jerome Powell's comments. Are we going to get that pause? But the bigger question is, are we going to get that cut in September? Also, do you think more regional banks are going to continue to go under, or are these just a bunch of isolated events happening surprisingly close together in timing? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.